Nothing illustrates the disparity of wealth and circumstance in the UK than the distressing sight of homelessness on the streets. Whilst tragic in itself, it's perhaps only the tip of the iceberg, as homelessness encompasses other hidden victims, which include families in overcrowded, poor quality, yet often expensive temporary accommodation at the expense of local authorities. We've invested in Home REIT, managed by Gareth Jones and the team at Alvarium, who act as investment advisors to the Trust. At IPO 2 years ago, the REIT was not only offering reasonable return for investors, but crucially for us, this was achieved by increasing the stock of housing supply for the most vulnerable in our society. I can't think of a more socially responsible win-win for investors and society alike. I therefore have pleasure introducing to you Gareth Jones.
So today I'd like to just try and give you an overview of what we've achieved thus far. Well, basically, first of all, who we are, what we do, what we are trying to achieve, trying to address a problem in the market, bringing in private capital to help alleviate a social problem, whilst obviously still keeping an eye on a return for investors, capital growth, and things like that. Who we are, first of all, is a Home REIT PLC. We IPO'd in October 2020. We had an initial public offering that achieved a £240 million raise. We've done two subsequent raises, the first one in September last year of £350 million, and one at the end of May this year of £263 million. So as it says there, we've totaled £853 million. In terms of equity capital, we've added on another £250 million of debt. And with that, we're still in a deployment phase. We've currently provided over nearly 10,500 beds across over 2,000 properties, helping alleviate homelessness or those who are at risk of being homeless across a variety of local authorities. The structure that we use is a long lease model. All of our leases are index linked, subject to a collar and a cap, which I can get into later. And the fact is that we have the lowest rents in the market, which means there's a strong residual value and alternative use in a downside scenario. We've built up our network now over the last 7 years, which was accelerated through legislation changes. So that means that all of our investments are off market, and we do also deliver uplift at the type of purchase. Next slide just takes you through who we are as a fund manager. Alvarium Home REIT Advisors are the people who are the organisation that manages the trust. As you can see there, that I'm Gareth Jones, accountant by trade. I've been in the sector now for nearly 10 years. My co-manager is Charlotte Fletcher, a lawyer by trade, and below us we have a variety of transaction lawyers, asset managers, and other accountants who help us with our analysis and going forward. So a very robust team. We're also part of the wider Alvarium team that has now 20 billion of assets under advisory, with 11 billion in real estate, and also looks after other PLCs that you might have heard of, such as LXI. This next slide just takes a step back, really, and just wants to highlight the challenge of homelessness in the UK. When we came to IPO in October 2020, it was estimated that 300,000 people were at risk of being homeless or homeless. The actual people on the street are probably only taking up 5 to 10% of the overall problem within the UK. With COVID, with removing of the safety nets, such as the Everyone In initiative, that is now estimated to be above 500,000 people. The reasons for homelessness can be wide in variety, but it really stems down to two things. It can be a loss of income and financial difficulties for people who might have already been I suppose okay and on the ladder, surviving within the UK, but then something hits, financial difficulties, lose their home, spiral into probably getting all the way down onto the street, or it's from leaving institutional atmospheres. It could be leaving prison, it could be leaving the armed forces, the foster care system, slipping through the cracks, not having a fixed home to go to, and then again, once you don't have a fixed address in the UK, it's very difficult to get back on your feet. You can't usually get a bank account, you can't get a job, it's very hard to get benefits, and that's where people are slipping through the cracks. The impact of that is obviously huge. The biggest stat, I think, that on this slide is the fact that those who become homeless are 10 times more likely to die than those of a similar age. And that is an overarching stat that always sticks in my mind. On the rest of this slide goes over different financial impacts for the UK, but the one on a human level that really hits home is that fact: you're 10 times more likely to die at a similar age if you are homeless. All the other stats on here just show how the amount of money that the UK government is currently spending on trying to alleviate homelessness. Just to pick out 1.1 billion annual local authority expenditure, housing homeless people in temporary accommodation. Temporary accommodation really doesn't solve the problem. It probably just delays the inevitable that someone will cycle out and go back to square one. And again, just picking out another stat, 18 billion is the cost of reoffending in the UK economy, with 67% of people released from prison without a home reoffend within a year. The overarching thing here is a house is a first step to really solving a problem. Everything else from that point becomes far easier. Again, this slide probably has a lot of detail on it. I'll try and pick out the pertinent points. What we offer is a tailored, cost-effective housing supply for those in need. We buy properties either off the tertiary market that need to be converted or refurbed, that we can then lease to charities or housing associations that will provide those properties to those in need. I'll get to it on another slide. Funding has been unlocked within the UK with legislation that was passed in 2018, which means that the homelessness cohort is supported in terms of funding directly from central government. All of the assets that we buy stand up on a bricks and mortar basis. They have strong residual value, which means that if they were, which we don't design them to be, but if they were used in other markets such as PRS or student market, the investor is insulated from drop in value because they are good bricks and mortar assets. But primarily, what they do for the underlying occupants is provide a good quality living space. It gives them a base to build on. We have wraparound care from our tenants that allows people to have pastoral care. It might address low-level drug and alcohol problems. It might address mental health issues. But from that point, once those things are alleviated, then it builds up their confidence. It would be things like helping with CVs, helping with financial management, helping interview skills, get a job, helping social skills. And giving them a toolbox to basically, once they leave our accommodation, which could be anything between sort of 18 months to 5 years, we hope that they will never return to homelessness. They get back on the ladder, they go back onto the system, they can take their own tenancies and things like that. They move forward and be a contributor to the economy and society. Where we buy our properties from is a wide-ranging source of properties. What we normally do is we source our properties. We then find a tenant that is appropriate for that area, and we work with the local authority to make sure we're addressing a need within that local authority, so that we underpin the deal from the very start. We make sure we've got appropriate properties. We make sure that there's a local authority need, and we make sure that we pick the tenant partners can address that need. There is a huge benefit to our tenants, number one, to help them grow, to help them address this problem in a long-term nature, but also there's a huge benefit to the local authorities. Due to the Homelessness Reduction Act of 2017 that came into force in 2018, it meant that local authorities are under a legal duty to house those who are homeless or at risk of being homeless. It placed a huge burden on local authorities. It also put a burden on all public services to refer those who are homeless or at risk of being homeless, and really swelled the amount of people that needed to be housed. The local authority was then faced with a huge problem. The only alternative they really had was a short-term accommodation, local B&Bs and hotels that, as you can see from the table at the bottom, were far more expensive than the solution that we are providing. And also it was only a temporary accommodation. They would be put in there, and then suddenly if the hotel or the B&B had a higher rent rate that they could get, they would throw someone out, and then the local authority was back to square one. A person might go back to a hostel, or heaven forbid, they go back back onto the streets. What we do is we provide stock on a long-term basis, really giving that security of tenure for our tenants, which means that they can help rehabilitate multiple people through the 25-year lease. But the key is what we do is set our rents at the lowest rate in the market. Every local authority within the UK sets a local housing allowance level. That's usually the lowest rate in the market, and that is what we pin all of our rents at. That is a discipline that we always stick to, and it really is the bedrock of what our fund is. What it means then is that our tenants are paying the lowest rent in the market. It means that it's a sustainable level of rent, and it means that they have a good buffer between what they pay us and the benefits they can claim on behalf of the person that is being housed. It means that it gives them financial stability, and it means that it's a long-term relationship. That long-term lease also, as I said, gives them that security of tenure, which is so important. What we've seen prior to the legislation and prior to, I suppose, the structure that we have is that charities and housing associations would build up a stock of beds where they were actually helping the problem within the local authorities, but the underlying freeholder wasn't tied into a long-term lease. It could be 1 or 2 years. They might build up to 500 or 1,000 beds, and then suddenly at the end of that lease, the underlying freeholder goes, actually, my property's worth, we've had underlying residential property going up by 10% or 8% or whatever, and actually I'm just going to sell the freehold. It's going to go into PRS and student, and that charity that worked so hard to build up their housing stock is suddenly back to ground zero. So it's something that we've worked on over time. We're probably the first to do it, and we're very proud of what we've achieved. This takes a step back and kind of and gives you an overview of what the legislation meant and what the legislation allows us to structure these deals and, I suppose, make maximum impact. What it shows here is that typically government funding for our underlying tenants within this sector represents 100% for the cost of care and housing. These are the most vulnerable people in society, and the legislation unlocks that it comes from the exempt housing benefit pool. What that means is the housing benefits flows from the central government, from the Department of Work and Pensions, through to the local authority, and then through to the charity tenant in the terms of housing benefit. Out of that housing benefit, they pay a portion of that to Home REIT, and that's typically around 40 to 50% of the housing benefit claim. It allows them to build up buffers for such as things as maintenance, the wraparound care, and operating their operations. As it says here, all rents are pre-agreed with the local authorities. We make sure all of our rents are at the lowest level in the market, the local housing allowance levels. And we also, which is very important at times of high inflation that we are at the moment, we've put a cap and collar within our leases, meaning that they are sustainable over that 25-year period. We have a cap of 4%, and there's no catch-up in terms of that. We will only raise our rents by 4% per year, even when CPI falls back. It will only raise at what CPI is, rather than catching up for 4 times of high inflation. As I am an accountant, I've put some financial stats in here of what we have achieved thus far. We're very proud on the social impact side, which we'll go through later, but we've also been able to deliver returns to investors. Since IPO in October 2020, we've taken our NAV from 98p up to 111.2p. That's a 13.5% increase. NAV, and in that time we distributed 3.9p of divvies to take us to a 17% return in those 18 months. That's ahead of where we thought we would be at IPO. The reasons being we've bought probably better yields than we thought we were going to buy, and we were able to secure long-term debt at better rates than we had modelled. That's obviously been very pleasing, and it's also enabled us to get support from the investment community, from people like yourselves at Momentum, and been able to grow the capital pot, as we said, through 3 different raises over quite a short space of time. In terms of social impact, what we've achieved is we've now bought over 2,000 properties. We're providing over 10,000 beds and helping address homelessness and those who are at risk of being homeless in over 126 different local authorities. We have 28 different tenant partners who are delivering a saving to local authorities of over 60% when compared to that alternative type of accommodation that really isn't addressing the problem. People do become homeless for, as I said, for a wide range of issues, and it just shows, I suppose, the wide ranges of things we are addressing within those 126 local authorities. And our focus is on the social side, but we do also look to address the green side as much as possible. We have 100% green leases within our properties, and also we will only buy properties that are close to local amenities and transport so that they have a low carbon footprint. This slide just sort of highlights that the sort of rigor that we have within the social impact that we are making. We've had an independent audit of our social credentials by the Good Economy Partnership that was released in September last year. It will be updated. With our annual report this year. And I suppose the biggest thing and the biggest comment that we are highlighting on this is 2 things. We provide good value for money, good quality properties. It provides excellent value for both the tenant partners and the taxpayer. But also that quote at the bottom, we're helping to improve the lives of homelessness or those at risk of homeless. Findings to date suggest that residents are very satisfied with the quality of the accommodation and support that housing partners are giving. It's helpful and valued. I mean, that is really what we tried to do from the outset, pairing the private capital that we get to alleviate a social problem. The next few slides, and I'm sure the guys will be able to circulate this presentation for you, and you'll be able to go through the quality of the properties that we're buying, but also the stories that the underlying occupants have. It could be, as I said, people who are trying to address low-level drug and alcohol problems, and then that has spiraled into other difficulties. It's those fleeing domestic abuse. Or those, and this one was leaving prison without a home to go to, and how getting back on their own 2 feet. And then also another one that we do is those fleeing domestic abuse. As I said, hopefully they'll be able to distribute this and you can read that in more detail. There's appendices that give more detail about what we do, our non-exec board, our financials, if anyone's too excited about that. But I suppose the last thing I want to address is the fact of where do we go next. We've grown the trust now to over $1 billion of assets, but that we're only really scratching the surface of the problem. As I said, it's probably over 500,000 people who will be at risk of being homeless or at risk of being homeless at this very moment, and we're providing 10,500 beds. We've been very responsible from the very outset to only raise capital to a distinct pipeline, so there's no surprises for investors. We've had very little cash drag. We've been able to invest our equity within 4 to 5 months of every raise that we've done, and we're well on our way to achieving that or better with our latest raise, and that's what we'll continue to do. We had an ambition to get to $1 billion of NAV within 3 years. We're well ahead of that at the moment, and we will continue to look to grow in a responsible way, as long as the legislative structure is still there, as long as the properties are still available, and as long as homelessness still is a problem.